So hello everyone, and thank you for joining today's London Climate Action Week webinar on insurance associated emissions. My name is Natalie Jackson and I'm part of the Knowledge and Learning team at A4S and will be chairing the session today. A4S has been helping financial institutions to measure, reduce and report their Scope 3 emissions and has released case studies and webinars on financed emissions. We'll be releasing content on facilitated and insurance-associated emissions in the coming months. It's great to be joined today by representatives from PCAF, Aviva and Allianz to hear firsthand about what approaches they are taking and to address the what, why and how of insurance-associated emissions. In terms of the format of today's session, we'll start with a panel discussion between our three guests, and we'll then move to a time of Q&A. So all those pressing questions, please do post them in the chat function and we will address them after we've been through the panel discussion. We expect the webinar today to last about an hour. Also, so you're aware, this webinar is being recorded and will be made publicly available on our website. So without further ado, we'll move to the panel discussion. So a warm welcome to Prabina, Klaus and Joe. So please could you start by just introducing yourself, including what you are responsible for within your organisation and your involvement with insurance associated emissions. If we start first with you, Joe.
Hi, thanks Natalie, and hello everyone. So I'm the Financial and Sustainability Reporting Director at Aviva, and we are, so I'm looking at all aspects of our sustainability reporting. My background has been in technical accounting, and I'm now heavily involved in interpreting and understanding the sustainability disclosure standards and also the PCAF and GHG protocol on emissions. And at the moment, I'm supporting our general insurance business in implementing the PCAF facilitated insurance associated emissions standard and looking at how we apply that to our personal motor book and also to our commercial book in the UK.
Perfect, thanks Joe. Those references to PCAF leads nicely to an introduction for Prabina, please.
Thanks, Natalie. Hi, everyone. My name is Prabina. I'm part of the PCAF Secretariat Group. And as part of PCAF, I provide technical assistance to our signatory members in helping them understand and implement the methodologies that is set forth by the standard. When it comes to insurance-associated emissions, the PCAF Secretariat facilitated the working group and all the activities, and we moderated the technical discussions and review the content, but also help with compiling and editing the standard as well for insurance associated emissions. So I'm very pleased to be here and share with you our some insights as well from PCAF point of view. Thank you.
Thank you. And finally to you, Klaus.
Thank you, Natalie, and good afternoon to everybody. My name is Klaus Schlobach. I'm working for Allianz Group. I'm responsible for sustainability at our P&C, property and casualty business globally. And we are mainly working on three areas. First of all, very similar to what the colleagues have mentioned, implementing the measuring and accounting, but also the target setting for insurance associated emissions in our portfolios, commercial as well as retail motor. But also working on initiatives for sustainable products and sustainable solutions for our customers, as well as initiatives on sustainable claims handling. And I'm very happy to participate in this panel discussion. Thank you.
Thank you. So firstly, starting with Prabina, can you tell us why organisations should measure, reduce and report their insurance associated emissions? And also, how is the methodology for accounting and reporting insurance-associated emissions similar or different to the methodologies for financed and facilitated emissions?
Thanks, Natalie. That's a great question. When it comes to why, I like to start in a very simple way, which is by saying that whatever gets measured gets managed. So measurement is that first step in order to allow insurers to move on to the next steps to achieve that Paris Agreement goals, and which may be to identify and assess what are the climate-related transition risks, maybe identify possible opportunity, and also take necessary actions to minimize the risk as well. So although it's the first step, I would say it's the key step is to measure, so we can, it almost makes way for the next step. And secondly, when it comes to emissions from scope 3, what we call the direct emissions, it is important to measure this because the emissions from the financial sector, which includes the insurers and reinsurers, is significantly higher than the emissions from scope 1 and 2. So it's a significant portion, and that cannot be ignored, and hence why there's an effort to standardize the method so we can measure these emissions. So that's on why. When it comes to the standard, the methodology itself, I would say that the main difference is that the insurance associated emission standard, it helps insurer measure and disclose their greenhouse gas emissions from the underwriting business. And the financed emission helps financial institution measure emissions from the loan and investment portfolio. And the financed emission standard can also be used to measure the emissions from the asset owner and asset management activities as well for insurers. So they are kind of interlinked, but also those are the key difference. And I also want to point out that when it comes to the similarity, both of the standards, so the finance emission standard and emission associated standard, they have both been built on the greenhouse gas protocol principles. So they have been developed as almost like an additional overarching requirement that guides accounting and reporting of that scope 3 that I just mentioned earlier. So being, that I would say is the key similarity. And just want to highlight one more key difference when it comes to the methodology itself. So as I'm sure most of us are aware that when it comes to the relationship between the financial institutions and the client, and insurer and the client, it's quite different. When it comes to finance emission or the investors, they can choose which client to make an investment in, which is not the case with the insurer. So the client ultimately chooses the reinsurer. And this has been reflected quite well in the different standard when it comes to what we call the attribution factor calculation, which is basically identifying the share of emission that we allocate to the investor or insurer. So when it comes to the key calculation for financed emission, we look at the share of outstanding loan or investment over the investee's value of the company. Whereas when it comes to insurance, we look at the insurance premium over the revenue or cost of ownership, depending on which segment we're looking at. So I hope that answers that question on why and the similarities and differences.
Yeah, that's great. Thanks, Prabina. I think especially that point of that different relationship for financed and insurance associated emissions, and that's something that we'll touch on later as well. So now to hear from kind of Klaus and Joe, from those in industry, using this PCAF standard, why did you both decide to put resources into undertaking this approach and aligning with PCAF? Why not use a different methodology or develop something in-house? So first to you, Klaus, would welcome your thoughts.
Yeah, I think that the answer is pretty straightforward. I think first of all, it's very much clear if you start and embark on such a journey as an industry, you need an industry-wide standard. Yeah, it's really crucial to have industry-wide standards for a couple of reasons. So our customers, our intermediaries, they do not want to face different questions, because we might need to ask customers different questions, we might need data, and it would be super annoying for all participants, market participants, if each and every insurance company, financial institution would come with their own methodology and ask different questions. So it's really a matter of efficiency, of industry efficiency, to have a common industry-wide standard, and therefore it was pretty much straightforward to build, as there was no standard so far for insurance associated emissions. It was pretty much clear to go with the partnership with PCAF and to develop together with the expertise from PCAF colleagues and experts from all, let's say, major insurance companies to really develop that kind of a standard. And I think we have really made progress. We now have, for the first time, we have that standard out, and I think it's around about like 9 months, 10 months that that standard is out, communicated, which can be used by everybody. And it's super crucial. I can only, let's say, emphasize it again, that the whole industry is using the same methodology to have a common approach. This is the only way to have an efficient approach towards our customers.
Perfect, thank you. Around that kind of standardization of approaches, I think is key. And Joe, any thoughts from Aviva on that, or just kind of echo what Klaus was saying?
Yes, I'd echo what Klaus is saying. It's important to have that standardization. Also, the fact that the PCAF standard links to the greenhouse gas protocol. There's a clear link there. It also it's based on the same principles as the corporate standard. So I think, yes, it really makes sense. There's already so much estimation involved that having consistency on the basis which PCAF is giving us is helpful.
Absolutely. So now moving on to the how, AFRES were very much around kind of practical steps and actions that the organisations can take, and very much learning from the approach and the methodologies used by others. So Joe, could you just spend some time talking us through the approach and methodology that you're using at Aviva around insurance associated emissions?
Sure. So there's I'll talk about the two approaches. So first of all, for our personal lines, for our UK personal motor portfolio, and I think one thing that's been really great there is seeing what good data we have there. It's one of the first things I've looked at on sustainability reporting and carbon emissions, where I've been surprised about how good the data is, and that's because for a very significant percentage of our book, we know the make and the model of the vehicle, so we know what fuel it's using. We know, we know how big the engine is, and we know how many miles they're doing. For those in the UK that are familiar with our MOT, which is an annual test you have, it records every year the mileage you've done. So we've got excellent data in terms of being able to calculate the emissions that are coming from driving that vehicle, and whether it's either diesel, petrol, or electric, so a high percentage. Where the insurance is through a broker, we don't have such good data. It's not quite as good, but it's still really very good. So we're able to then, so like much of carbon emission reporting, insurance associated emissions are the same. It is a big data collection exercise, but we're able to get a very good idea, and then we're using the PCAF attribution factor to decide to allocate an amount associated with with our insurance of those vehicles. It's quite a different story when you look at the commercial lines. For us, much of our book is SMEs, so small and medium-sized enterprises that are not required to publish any carbon emission data. So we have to, first of all, so we're using our ONS, the Office of National Statistics in the UK, and we're classifying the companies into a business sector, and then using public information in the UK to try to figure out what we might reasonably estimate that the emissions to be from that sector. But that's a difficult job, and there's even a lot of judgment in that, and then you're getting to an estimate. And so it's very much estimated. Then we will ultimately be looking at what's the premium that we're charging for insurance as a proportion of the revenue of that company times an estimated emissions number. So it's quite difficult. And it's actually very interesting because on the personal lines, we're getting a PCAF data score, for those that are familiar of it, of 1, which is the very best. And for our commercial lines, it's very estimated, and we're in PCAF 5 territory. So nonetheless, it's helping us to, by seeking to implement, it's helping us to understand what data we need and helping us to put in place better methods of capturing data, which you really need to do at the start of a customer relationship. You can capture data then. It's much harder to do once the relationship's established. So, we're using that data. We're looking at what sorts of targets we might set and trying to understand also the other factors that are contributing to trends in the emissions and the right amount to be associated with insurance.
Brilliant, thank you. Interesting, the very kind of different approaches and data quality across the two lines of business. And it's not often you hear that you've got very good data when referring to sustainability. So thank you. Now to hear from you, Klaus, it'd be interesting to hear the approach and the kind of steps taken at Allianz.
Yeah, so first of all, I can fully agree to the observations that my colleague Joe just shared. We're doing the same experience. Maybe let me start a slightly different and I think you did the same, but what we also did in the very beginning, when we're going on a journey of transition, of course, you need to look at risk and opportunities associated to that transition. This is exactly what we did. We did an in-depth analysis of risks and business opportunities for sure. And what we found, and I think everybody knows that if you look at the industries which will be most be contributing to the transition and at the same time most be affected by the transition, it's very clear. It's the energy sector, it's the transportation/mobility sector, and it's the building sector. Yeah, and we have big discussions in all those 3 sectors. Those sectors, by the way, contribute to more than 55% of the global emissions. So 55% of the emissions are associated with those 3 sectors. And there will be a lot of investment, capital expenditure needed in those 3 sectors to drive the transition, which might lead to business opportunities for all market participants. And that was the first guidance that we were using to narrow down the potential, let's say, fields and areas which we would like to start with. And then for sure, the second one is very clearly, what is the composition of your portfolio? Yeah, you also need to look where's the heavyweights in your portfolio, because it does not make sense to look at niche areas of the portfolio. So every portfolio of each and every market participant might look very different. As everybody knows, Allianz has a huge footprint in motor. Allianz is a motor retail company. And as I mentioned, transportation, mobility is one of the most contributing sectors. So it was pretty straightforward to really look into the motor sector, which is, and I would agree, is the easier part of the exercise, because you have so much standardized data out there. It's not, I mean, still there's a lot of work to be done, but you can rely on quite standardized, also external data, and you need external data to match to your portfolio data to really understand the footprint. On the commercial side, I can fully agree to what Joe said. For medium-sized companies, it's really difficult to get specific individual customer data from data providers. It's really difficult. You really need to work with averages and then try to find your way forward. And that is then completely different for big corporates, which are publicly reporting, because all big companies are obliged to publicly report on their carbon footprint. So if there is a portfolio, a significant portfolio in the corporate space, it's again a quite easy exercise from a data quality perspective, because you can rely on publicly reported and, by the way, audited data, which is really good. And that's the way how we made our way forward. And we are facing, of course, a couple of challenges. and maybe happy to talk about some of them, how we try to deal with them in our way forward.
Yeah, absolutely, Klaus. And just touch on that where you mentioned, those challenges, you kind of see these equations, oh, it's straightforward, you can do this, but there's the data challenges, but there's, lots of other challenges when you're actually practically trying to implement this. Could you just touch on some of those, seeing as you mentioned it, and then we'll get insights from Joe as well.
Yeah, I mean, one of the challenges for Allianz, and I can only talk for Allianz, is that we are a big global player with, we are operating in 50 markets, in 50 different, we call it operating entities. And that was a little bit a surprise that obviously, so for example, for cars, data is not that standardized in each and every market. There are very different circumstances. A car sold in China has the same car sold in China has a completely different footprint than the same car sold in Europe. And you have to use different data. And then, of course, we also need to manage the organization internally. What we have decided was more, let's say, strategic question. Do we want to go for a centralized data gathering and data hosting process, or a decentralized one? We have decided to keep it decentralized, to keep it local, to have, of course, a company-wide standards, guidelines, yeah, building on the PCAF standard. But we have implemented the data gathering, the data, let's say, the computation, calculation, and the reporting to the group on a local level. And this might be one way to approach that, to really consider the local, the specificities in the local markets and in the local environment.
Yeah, thank you. Is that kind of working across different jurisdictions has those kind of inherent challenges? Joe, it'd be interesting to hear at Aviva, those challenges, they rhyme true, or the ones that you're facing as well?
Yes, yes, very much so. You can see if, for example, our UK, if I take our UK motor book, is we've got much more direct relationships and direct information. If we try to do the same thing in Ireland, it's almost entirely through brokers. So we don't have access to the same level of data with in those broker relationships. And I think on the commercial lines, probably the biggest challenge is even just getting clarity on what business sector that our customer is operating in, because it's not always that clear. And I think it's something we've realized that it's never really mattered before. And the data that we've got has grown up. Again, there's a lot of brokers involved, but people have categorized businesses in many ways, many of which are similar, but they've got different names. And they don't map our internal basis for deciding what industry sector doesn't map well to the data that the government published data on emissions by sector. So it's become a big mapping exercise, and a lot of judgments in the mapping that has been difficult, accentuated by the fact that the underlying data is not that good. So that's something that we want to try to standardize and address as we move forward.
Yeah, absolutely. It's interesting you raise that point, because we hear a lot from financial institutions around that kind of coding point of, you're using coding of clients, counterparties for a use that the coding wasn't meant for, around emissions, and kind of making sure that's correctly interpreted. So Prabina, we've heard from kind of Klaus and Joe about the challenges that they're facing. PCAF obviously works with a wide network of financial institutions. What are you seeing the challenges there, and is there any kind of examples of good practice and solutions that people are coming up with to try and address some of these?
Yeah, thanks for the questions, Natalie. Firstly, from PCAF perspective, I think the main challenge for PCAF is to make sure we build that robust standardized methodology, but also ensure that it is built with all these experiences, taking these experiences and expertise into account as a facilitator and as a secretariat. And often it can be a fine line between building a very strict, robust methodology, but also allowing the flexibility for the measurements to be flexible, because we are aware about these data limitations, and if we are stringent, then it can often be very challenging for a lot of participating FIs to really account for that. So it's really the challenge is making sure that it's robust, standardized, but also make sure it allows that flexibility, because it is a global standard at the end. And working with a lot of financial institutions and the industry, we get different views and perspective, which all needs to be considered when it comes to development of the standard as well. So I would say that's challenging, but it's manageable. And from the perspective of the insurers or financial institutions that are carrying out the calculation, data is definitely a key challenge that we have heard, and as mentioned by Joe and Klaus as well earlier. And when it comes to best practice, we always say, don't be put off from doing the calculation because your data quality may be more towards the 5 or 4. The key thing to do is just start the calculation with the resources that you have, and just to get started, and maybe have this aim to gradually improve that data over time. And also use the resources that you have internally. So whether it's your internal teams that may already have the data available, or through engagement. So you might have clients where you have a good relationship with, and use that to leverage and make connection and really, communicate and make it 2 ways. So we have seen some financial institutions really engage very closely with their clients, and that kind of help them to get the best data quality they can get, and improve the emissions over time as well. So.
Yeah, absolutely. It's that start now, even though we know it's a world of imperfect data in most cases. Fantastic. So just a quick reminder to those who are listening, please do post any questions that you've got in the chat, because we've got a couple more questions in the panel discussion, and then we'll be coming to Q&A period. So next we're going to move on to, we've come up a lot in the discussions is around, measuring those insurance associated emissions, but now we want to really think about that kind of, so what does that actually mean in practice with engagement? How can the results of calculating your insurance associated emissions be used to incentivize action from customers and drive decarbonisation? So be interested to hear from you first, Klaus, on the approach at Allianz and your thoughts on this.
Yeah, so first of all, of course, we are still working on the, let's say, first measuring. We have some baselining so far, but I think the first real measuring, accounting and measuring that we would be able to publish might be for this year. And that will be the basis then, of course, for targets that we are setting. And then we can, of course, start. And that is really important. We can start engaging with customers, and we can start supporting customers. Yeah, so to have the transparency. Sometimes this is also, let's say, for the customer new to see the transparency. The big corporates, of course, they have their transparency. More medium-sized commercial, they don't have the transparency about their own carbon footprint. Maybe they do not have, let's say, the resources. Maybe they do not have the skills and capabilities to do so. And then we can start engaging with customers, creating awareness, but also start talking about actions going forward, specific actions that we can take together. And of course, then offering support in terms of insurance coverage for the necessary transition technology, but also offering a kind of advice, the way forward. That would be something which would really help our customers in their way in the transitioning.
Yeah, thank you. And thoughts from you as well, Joe?
Yes, I think this is very much a journey, and I would really echo what Klaus is saying. I think it's got to start with the data, and as you start reporting that, you start to see trends, you start to understand better micro and macro impacts, and it is enabling us to really have meaningful conversations with customers, and it's helping us think about how we it helps inform us what our customers want, and how we can be, we are developing to make sure that we are continuing to provide the offering that our customers want, and people, and then facilitating that transition, because customers do. We do hear from customers that they want to be doing the right thing. They want to be supporting transition to net zero, and how can we help them do that? So I think we're very much in the stage of understanding our numbers first, understanding what it means, starting similar to Klaus. We'll be looking to publish some information this year, that baseline data really helps us to monitor the trends and make sure we as an industry then are able to support the transition.
Absolutely, thank you. And Prabina, what would be your take on this, especially in light of the comment you made at the start, given the different relationship for insurers, given, say, banks and their investments? Would welcome your thoughts about that kind of engagement and how best to incentivize action within customers.
Yeah, going back to my point, actually, about the relationship, like you mentioned, because the relationship between the insurer and the client, although there may not be a direct ownership when it comes to the interest or ownership on the activity, it is true that business activity of clients can be limited without insured. And I would like to kind of echo what Klaus and Joe said about the engagement as well, looking at it from the perspective of not just as an insurer or as an investor, but like supporting the clients themselves and how they can benefit from this engagement as well. I think that's very key. And I would say I would definitely like to echo that point that was made earlier. And going back to the point about doing this emission accounting as a first step, is that it helps you identify the hotspots. So you may not have resources to engage with every single client of yours or every single customers, but really that's the key step before you even get into engagement, which really enables that real impact as well in the economy. So yeah, I think I would just really put the emphasis on the engagement, and that could really drive some impact.
So lastly, before we move on to the period of Q&A from the audience, it'd be great to get a quick idea from each of you. Where are you planning to go from here? We've touched a little bit on it already, but just to kind of set out what would be the next steps and what are you focusing on in the next, say, 12 months. So we go to you first, Joe.
Hi. Well, we are looking to develop targets, and I think the really key thing about target setting is if you either set it too high or too low, you don't drive the right behavior, because either it's people ignore it because it's completely unachievable, or it was easy. So in collecting the data, that's really helping inform the target setting. We definitely will move to publishing those targets, but I think that's something that remains under discussion. And I think getting to a place where we feel comfortable and understand enough to publish a target externally, that involves us measuring internally first and reporting it and making sure we understand it, and we can also understand the movements and why. And so we're also, for example, we're building more data on is the movement in the emissions, is it down to the fact that have more of our customers actually moved to electric vehicles, or are they driving less? Are they catching the train more, or some alternative? So trying to understand the drivers in the trends, and also I think engaging with government and policy setters that looking to drive the right behaviours, to see how we can help help them with the information that we have, just to monitor some of the macro trends in the market.
Yeah, absolutely. It's a recognition, especially around things like electric vehicles. Some is dependent on government policy and how that's feeding into the market. Klaus, it'd be interesting to hear from you about next steps and the focus for the next 12 months or so.
Yeah, so we are about to finalize baselining, already starting with the auditor on the auditing of the baselining, because this is relevant. If you publish a baseline, it has to be audited as a, let's say, publicly available information in your reports. We are preparing for the target setting. I cannot share any details, neither what targets nor what point in time they will be published, but we are working on the target setting. And yeah, we have the same experience as Joe said. Yeah, you need to find the right balance between ambition level and, let's say, what is realistic. This is a challenge, and you also need to match it, let's say, to ECBIT, because one thing I have maybe not mentioned so far is our approach is very much driven by, we want everything we are doing, we want to do it based on science. Yeah, so we really say we are not relying on trends or political, let's say, elections or whatnot. We are basing the strategy on what science tells us, what is necessary to be net zero by 2050, in line with limiting global warming to 1.5 degrees, and what science is saying is necessary, that we are taking serious and try to implement into our strategy. And that also means, of course, aligning decarbonization targets also with external, maybe sector-specific transition pathways. And that is what we are working on at the moment to finalize the specific target setting.
Fantastic, thank you. And Prabina, what's next for PCAF?
For PCAF, we will continue the development of the second version of the standard, which will include additional segment and line of businesses. There's still some alignment needed when it comes to what topics to be included. So as you may all know, PCAF is an industry-led initiative, so all the effort when it comes to what's to be included and not included comes from the industry, financial institutions themselves. So there's still some alignment to be needed, but potential topics could be, for instance, treaty reinsurance or engineering lines, but more will be published later once we have more idea on this. And another thing we'll continue to do is develop the data that we have available in our PCAF emission factor database. So it's made available to all PCAF signatories, and the Climate Data Working Group continues to update the existing data and add any additional data that's required as well. So that's also currently ongoing, is adding data for the calculation of insurance associated emissions as well. So two key things that are happening.
Great, thank you. I'll now open the floor to questions. So any pressing questions that you've got for our panelists, please post them using the chat function. And on the list, you can see it just says hosts and panelists, so we'll see those coming in and can direct them accordingly. So we'll see. Anything you'd like to ask. I can kick us off as well. So I would say, measuring insurance associated emissions is, quite a big task, looking at different aspects of the portfolio and addressing how to move forward. For those that are maybe earlier on in the journey than you guys at Allianz and Aviva, what kind of advice would you give them about getting started and actually taking those first steps in progressing? Would welcome thoughts from you, Klaus, and then Joe.
Yeah, what we found was very helpful is to get started. Yeah, because we had a lot of theoretical discussions, but we really discovered the real challenges once we got started. So get started, don't wait, get started. Second, what was really a learning is involve the real business people into the exercise. Do not do it as a, let's say, ivory tower exercise. Involve the real portfolio managers, the business managers into the exercise. because only then you can onboard them at a very early stage, because they, at the end of the day, will be responsible for managing and steering the portfolio. And if we want to, let's say, steer the portfolio, then sustainability related KPIs need to be really integrated into the business steering KPIs, not, let's say, a separate one in the ivory tower, but close to the business. And those would be, let's say, really the two recommendations. Start doing, and then you learn on the way, and immediately from the beginning also involve the business people into the exercise.
Yeah, absolutely. Welcome thoughts from you as well, Joe.
Yeah, I'd echo that. The other thing I'd say is get some data on the table. I think we've had really rich discussions that people have really enjoyed and really gained insight from. Once we've started to collect the data, and that's been really helpful. I think everyone that's been involved has really enjoyed it and just felt that it was helpful for us in understanding our business. And absolutely, it's got to come from the business, the people that really that they know the data, they know their customers, and I think it really helps think and inform how you're building your strategy for your customers in the future, and how you can do things efficiently. And but yeah, I would say get started and get some data in front of people, because people on the whole at insurance industries like looking at data.
Yeah, absolutely. Thank you. Next question around kind of PCAF and using that as a methodology. So first to you, Prabina, around, there's two lines of business in the PCAF methodology. Now, a little bit of information on, why were those lines of business selected? And you kind of touched on it before, but anything else to add on kind of what's next? And then to Klaus and Joe, the question around, the baselining exercise, was that just done on the lines of business for which PCAF methodology exists? And for those lines of business where the methodology doesn't exist, what action have you taken? So first to Prabina on that kind of PCAF lens, and then to Joe and Klaus.
Yeah, of course. So your question on why those lines of businesses were chosen, or the segments were chosen. So this again goes back to my point about how all the asset classes or segments that are chosen are based on what the signatories or the participating working group members decided were relevant. So there were a number of things that were considered. So it comes to the data availability as well, how feasible it is to actually account for these emissions, and what are the popular line of segments or business as well that the participating members were interested in. So it was really based on that. And when it comes to deciding on what's next, there were some suggestions from the participating members that were provided, but it was not possible to develop methodology, whether it's because of time constraint or because we needed more kind of understanding on this topic. So they will be included in the next round. And we also did a public consultation after the first draft of the standard, before the final draft was published. And we received quite a few feedback and comments and just suggestions from the wider stakeholders as well who were interested. So this was a public consultation that was open. So those comments and feedback will be taken into consideration as well when we decide what's next.
Thank you. And then to Klaus and Joe around that, your approach for lines of businesses aren't currently covered by the PCAF standard.
I'll jump in. I mean, I think we have just started with the two lines of business in the first draft of the PCAF standard, and that's really because we've got so much to do on sustainability reporting in general, and I think starting there where we had some guidance seemed like the right place, and so that we are gives us an opportunity to test out what PCAF is saying, and hopefully it will provide learnings where there'll be a read across to other lines as they develop. So I think we felt it was more than enough to be starting with. And so we will definitely stay involved with PCAF and the consultations and feedback our learnings. And we'll wait until there's more of a consensus view on what next for the other lines.
Yeah, and it's the same for us. We only did baselining for the LOPS in scope of the PCAF standard. First of all, yes, we all have a lot to do. We need to prioritize, but there is also, let's say, methodological argument, and that is what we see is that the attribution factor is really key to attract emissions to a portfolio, or let's say to attribute to a portfolio. And it's quite an important lever, yeah. So it really makes no sense to have, let's say, absolute emissions, for example, on buildings, homeowners, if there is no attribution. But what would you do with it? How would you compare that to other emissions? So that's really something where we need to rely on the methodology, because it's so much work, as Joe said, to get the data together. You need to set up in the right methodology the data gathering and matching. You always need internal data, and you will always need external data to complement the internal data to get to the real picture. And doing that without the final methodology at hand, I think this is a waste of money, or you would do the exercise again. And therefore, yes, we have only started baselining on what is in the PCAF standard so far.
Thank you. The next question is around kind of working together and collaborating and governance structures. I think we touched on saying getting this data requires you working with various different colleagues. Could you just touch on the approach that you've taken to setting up those governance structures and working together, and kind of advice that you'd give to others in that kind of area, bearing in mind a lot of the listeners will come from the finance team? So any thoughts, Joe, Klaus, or Prabina?
Yeah, I'm happy to go. I mean, I think this does very much have to be a collaboration between those who are setting our sustainability strategy, our customer strategy, those that have the data and the technical knowledge around the PCAF guidelines, those that have knowledge around the science, and those that have the knowledge of just customers and who we're selling to and what's what. So I think it has, it's definitely been a good thing. It's promoted lots of really good conversations in the business, right from the CEO of our GI business and customers, group functions, and all linking back to our customer strategy. So I think absolutely collaboration is key, and I think it's back to a point Klaus made earlier. This has got to be embedded in the business. There is no point somebody at a group taking someone else's data and and then saying this is the answer that we've come up with. You've really got to get right through the business that engagement and that understanding of the nitty-gritty to really drive the right behaviors and get the real benefits out of this.
Yeah, and I can only support that. So we did not really set up a specific governance for that. We were just using the existing governance for our regular business. Yeah, so we use the corporate rule book. Of course, we added something there. We are using the same systems as we are using for the financial reporting. So we're leveraging existing systems, processes that are in place, which we are using for managing the financials. We are now using as far as possible to manage the non-financial performance of the company. I mean, I don't know if this is absolutely the right way, but we strongly believe that it is the right approach to embed it into existing processes you're already using for managing your financials.
I'm going to have to come in and strongly agree with Klaus there. I think we're doing exactly the same. We are mirroring the governance that we already have in place for any information that we publish externally, and so mirroring as much as possible the processes and controls and governance on our financial reporting for our non-financial and carbon sustainability reporting. I'm a passionate believer that that's the right way to go.
Absolutely, taking that approach for that sustainability information as you do with the financial. We've got a question around that, kind of talk about governance. To what extent has the board been involved and supportive?
Yeah, fully involved, and it is necessary, and fully involved in let's say not the nitty-gritty for sure. I mean, but the major decisions have been taken by the board of management. Yes.
And it's the same for us. Our board are very interested. Our board, our audit committee, and the board risk committees, all aspects of the board really are looking at this and are very engaged. And it's got to be part of the strategy and just the way you do business.
Absolutely, and that tone from the top is key. I think we've got one final question before we kind of move to close and wrap up. So it's, what are the kind of biggest risks and challenges around, achieving net zero in assurance associated emissions? What do you see as those big challenges in your organisation at Prabina, in PCAF, in the market more broadly?
I would say we can't do this on our own, and none of us can. And we have got good data, but it has to be supported by policy making, by also getting the transparency of data. I think that helps customers. It enables them to do the right thing. If they have more data, they can then take action themselves. Policymakers can take action. So I think it can be an inhibitor to if people think by publishing the data I am somehow responsible. I think it's and I think that comes back to in this point around the difference between financed and facilitated emissions. I think we have to see this as we all need to work together right across the value chain of how we operate, as both as individuals and as businesses, and the risk of not doing something is ultimately much greater than the risk of doing something, but so not to let it be an inhibitor.
Yeah, I think this is really, the biggest risk, of course, if we don't meet the net zero targets is with the human race on the planet. To be very open and blunt on that, it's our future that is at risk. Not only our business, I think you know about that. The biggest challenges maybe is, I would like to mention resistance, opposition. You will find opposition within your organization, which is, I think, very, very normal if you have ever gone through a, let's say, change process or a transformation process, you will always find people who are not convinced and who see more the risks and the downsides. And you will find opposition within your organization and need to manage carefully. But you will also find opposition externally, because obviously not everybody likes what is necessary, and I think that's really the biggest challenges beyond, and of course beyond what we are operating in the frame of political environment, regulation. We cannot achieve that alone. Yeah, it needs to be a joint effort. Politicians, regulators, industry, customers, everybody needs to move into that direction. It's not that one alone can achieve what is necessary. Everybody needs to work together, but it should not be an excuse for anybody to say, okay, I'm not the one who can achieve it alone, so I don't need to do anything. Yeah, please don't get me wrong, but this is the challenge, to align everybody politics, regulation, standard setters, industry, customers, suppliers, to really get there where we want to get.
I completely would like to echo what Klaus just said as well. I think for me as well, the biggest risk is that unalignment and everybody working in silo and maybe creating own methodologies or creating own ways of doing this, because as Joe mentioned earlier as well, we need to all kind of come together, all the scientists, all the industry experts and everyone to come together in order to really, you know, make some real impact in the economy. So it's not just about measuring the numbers and how much you're responsible for it. We have to think about the bigger picture as well and think about our common aims, which is to essentially reduce emission overall from a global perspective. So I think, yeah, that's the biggest risk that I would say for me as well, is that misalignment and that you know, everybody not thinking about the synergies and just working in silo.
Fantastic, thank you. So appreciate we're quite tight on time, but just before we close, it'd be great to get, you know, final takeaways from our panelists or any top tips that you'd recommend for the audience today. There's been lots peppered throughout the discussion, but any kind of top things you'd like to finish with. So Prabina, to you first.
Thank you. I think we include quite a few tips already. Something maybe that I wanted to add was, you know, like we mentioned earlier, that it can be quite a daunting task to start measuring. And you might, you know, it's very overwhelming. And I would say a key tip from me is to join an initiative. And it could be whichever initiative that really matches with the values of the company. But it's really helpful in sharing that experience with your, you know, with your peers and learning from them, learn from the challenges and apply it to your own accounting exercise as well. So I think it's a very useful resource to have, is that initiative. And secondly, I would say read the PCAF standard if you're measuring, and also the annex of the standard especially has very good information on the data requirement, the equation, which often gets neglected because it's the annex. So I would say that's another tip from me, is to read the annex of the standard. Thanks.
You, Klaus, your top tips, key takeaway?
Yeah, the first one I already shared. Get started. Yeah, don't wait. Get started in measuring, in gathering data. Apply a standard and start the journey. Then, of course, think about targets. Yeah, because you can only drive change with targets. Yeah, that's the top tip. Start measuring and accounting, and think about targets, and then you will be able to drive change.
Finally, Joe.
I would say engage people, get them involved, because when they're involved, they're part of the solution. And you know, people, we find at Aviva, people really love to be involved with this as a project. They really feel that they can make a difference, and you know, bringing them on the journey, it is massively helpful, and you know, really helps drive that alignment. So really make it part of your strategy, get it end to end, right in the business, people that customer facing, right through to board level, yeah, let's encourage everyone to get involved.
Thank you. That's given us lots to think about and work on for those joining the webinar. So thank you very much. To those of you who are on the webinar, you know, if you're interested in finding out more about this topic and the work A4S are doing in this area, please do sign up for the A4S newsletter, as we've got case studies and resources on this topic that are scheduled for release in the coming months. Also, if you've enjoyed today's webinar, we've actually got another one tomorrow on transition plans. So please do sign up to attend that too if you're interested, and we'll just post a link to that in the chat function. So that just leaves me to say, bang on time, a massive thank you to the panelists, some great conversations and great insights from the work that you guys are doing. So thank you very much for your time, and thank you to those in the audience for joining the session today. Enjoy the rest of your days. Thank you.
Thank you.
Thank you.
Thanks. Bye, everyone.
Thanks. Bye.